Hi and welcome to Magic Scanner website, a fundamental stock selector for KLSE and SGX financial market. You're about to learn the secrets to raking in double to triple digit return per annum in trading or investing, no matter how much time you've had to prepare. It doesn't matter if you've never had any past experience or education, this Magic Scanner will tell you everything you need to know without spending too much brain power. This is unlike any tool you'll find out there. It's the edge that most analysts and fund managers want or have. Go ahead and get yours now.
To another Friday chart clinic of the 11th of January 2013. How is everybody doing? Okay, how's everyone doing? Okay, good. Making money? The usual question. Now, what we're going to do today is this our performance. We're going to be looking at our performance 2012 and 2011. All right, and now that's fun. And the second today we're going to be doing is also look at some of the best career with the highest pay. Right, this is a hint. I'll give you a hint. It's a financial sector. All right. So, hello, hi Catherine. How's you doing? Okay. Okay. So, and then the third one will be, if you have time, we'll be looking at health and wealth. With time permitting, there's a body for life exercise program. Okay. So that's what's going to happen for the next 25 minutes. Good to see you all again. So I'm just going to be starting. Okay. Can I proceed on? Is that okay? Right. Okay. Good. Is that all right? Can I get a hint? I can proceed with this agenda. Okay. Okay. All right. Go ahead. Thanks a lot, Chris. Okay. Happy New Year to all. Okay. Let me just get this 2879 at CCM, and this is a CCM and a plantation. Okay, and 6688. Okay, 6688. 6688. Okay. All right. What we're gonna do is to show you is what I did last Saturday is the year 2012 together with year 2011, the stock performance guide. Now, what we want to do is actually a case study revisiting what we have recommended on our premium section. So, for those of you who's really interested in our premium section and want to know how well did the stock perform over the last 2 years when we make the recommendation. So this is what we do. Because typically what I would like to do is every year, beginning of every year, we will revisit back all the stocks that we talk about and how well they fare to give you a sort of fair indication is how good was the performance is. Is that fair enough? Okay. Is that okay? Is that fair enough, people? Right? Okay. Hello, Sin. Hi, Peter. Okay, good. All right. Yep. Okay, Chris. Okay. So if you look back, what we have here, let me just close this down. Okay. For just a bit of introduction to the premium members, the difference between light members and premium members. You can see on the light membership, which is on the light, there is somewhat limited on what you can see. Even the morning opening, that's limited. Occasionally we have some free posting that we can see. Also, the only thing that we find that we're very good to get a lot of feedback is the Friday chart link, which is live and it is yes here. We also have the closing bell, which we do at 4:15 every Friday. So that's this one occasionally we have 1 or 2 invitation, but if as a premium member you get to do it, get us live, and also the daily news you get free for the light members. For the premium members you get to yes for all. And also I just want to draw your attention to this segment that we do is the monthly stock market comment, where in there for investing purposes, we have one investing case study for the KLSE and one for the SGX. Okay, and also for the premium members, you get to use the Magic Scanner too. Okay, so that's one of the benefits of being a premium member. Another thing I'd like to highlight is the a small portion of your premium membership fee are actually donated to a charity. Alright, and we do this every month. What I do, I write a check and give it to the charity for that one. So we always believe when you do charity, money will come. How many of you believe in that? Okay, when you do charity, alright, you perform well, more money will come to you. How many of you believe that? Okay. Okay, good. I got some response here. Good. All right. Thanks, Kong. So this is the charity now. Now just look back here. What we have. Sorry. Okay. Now this is for the year 2011. The first half divided to the first half and second half based on the stock pick. You can look back some of the old archives there, right? You can see if you have bought it and still hold it to now. Now remember, these are high dividend stocks. There's another list too that we talk about, is the dividend don't lie list that we updated on the book. If you want a copy of the latest update from the book, how well it fare, just send me an email. We can send you that report. But on the 2001, the monthly stock pick with dividend focus. Now the key thing here I like to talk about is the dividend focus here. Okay, this dividend focus. Let me just draw the lines here, right? Here, this is the dividend focus, right? So we pick all this, really pay very well. You can see it pays a good dividend, 84 cents, and pays in return JTI since December, which is almost 1 year, 2 years, about 12%. Now these are annualized below here, right? Return plus dividend per year, adjusted annualized, about 12% return. Of course, one of our portfolio did very well was the return from Pet Duck here too, and also Guinness Anchor. Now those of you people who did follow us sometime December and bought Guinness, and then someone when it went up to $10 and decided to sell it, and say, hey, I bought Guinness, why I didn't make money? You say, that's the whole thing. If you want to have a focus on the dividend, you got to have some sort of period of holding. Now bear in mind, if you go to the next slide, I will tell you certain stocks do pay 4 to 5 times dividend a year. So if you don't hold your position long enough, you're going to miss out all the dividend payment. Now that's a clue, a food for thought today. Okay, and also Tasco did very well. We bought it at time recommended in October, 143. Now this was priced at 31st of December, so it made also another 40% return. The first half of the year, you could see Nestle up to today is about a 20% return, which is good. Now 47 to 62. Apollo Food, another one which is really consumer based. That one that really disappointed me so far, I was kind of surprised, was FNN. Although the FNN SGX listed in Singapore did fairly better one. Yeah, but up to 31st of December, it is still only minus 0.6% return inclusive of dividend. Okay, because at that time it could be partly FNN was bought at a higher price level. Okay, and on the first half JTI also, depending on the price down, this is the key thing here. See this $7 and the 650. Okay, so that is why if you buy fundamental stock, it is also very important to able to time it. Okay, able to time it. Use some sort of market timing to time it to give you a better improvement. Now, if you bought at 650, that will give you a 12% return. If you bought at 720, that's only give you a 2% return. It would take longer time to attend. So that is important. I reckon people should learn a bit about market timing. And what do you think of Faber, Peterboo? Again, giving good dividend. Now remember, Faber and Chris Asset, all these longer term investment. I think they will give a good investment, Peter. Okay, if the question is able to hold it through thick and thin. But the thing is, I've noticed a lot of people, they can't hold it. They only hold it like less than a year. So how are you going to make money if you less than a year? So the holding power is a question there. Let me just get back to this again. Another questions here. Okay, hectare is paying 16 cents. Very important. Hectare, yes, it is 16 cents per hectare. It's pay 18 cents per year. 16 cents. No, that was 18 cents received so far from May 011. Okay, so that's the received 15.5 cents. Base. This is return is dividend plus capital gain. Okay, take a note. Okay, only one disappointment was YTL Cement. Okay, YTL Cement, that one gives about 0.08. So if you look back, Tasco again in January, if you bought it at the time, only 28% return. Compared if you buy in October, that's a 40% return, because we're talking about annualized return per year. Okay, next slide. So on the 2002 stock pick with dividend focus, what I want to highlight is those good picks that we have done for the first half of the year, where TM actually had a good return, 34 and 47%. And one thing good about DG, it is still a very regular payment, a 5 dividend payment per year, followed by Encar, which is a 12%, a 4 dividend payment. Now these people, you will notice on the dividend yield is somewhere between 4.5 to 7% return, and slightly lower PE or 15 here. Now it's very important, if you look back on the chart here, let me just get back to the let me just show you what I meant on the dividend. Now what you do is scroll right at the bottom in here. We have reorganized the menu on the footer in here. You can look at the 5-year trend, okay, under the premium section here. Okay, now we can see this is a Bloomberg talks about the PE. If you notice the PE over the years under the SGX, it is around the 15 times. Okay, 15 times on the PE. This is for the premium section. So if you go back to my presentation here, you can see historically, right, we want to buy something that which is less than the 15 PE. Now DG is above the PE of 15, so to me DG is a bit overpriced, because historically KLSC, you can see that typically prices are below 15 times. So that's what we could see. A lot of these that we are looking at are below 15 times. Now going further on the second half of the year with Guangzhou, these are still trading very low, 5% PE, 7%, and because do bear in mind, the only big one was the drop on the plantation stock TDM, a 24% drop inside here, and also the Amanah Raya REITs and the HS plantation, which hasn't moved much due to the nature of the plantation stock. So we did have some good performance over the beginning of the year. Now this, we have to give it a bit more time, and I do believe come sometime next year, towards the end of the year, and I believe the plantation sector will cover, you will see HS plantation, CBIP, which is also plantation, will do quite well, especially TDM too. Gas Malaysia, Analyse is about 8% return. They are coming back now and probably be giving also a return. How is it so far? Is it okay? Right? Is it alright so far? Okay, I got a question here. How long do you recommend people to hold on to your stock portfolio? What do you think? Peter, what do you think? What do you think you hold on to your portfolio? What do people think that you should hold on to your portfolio? As long as possible. That is correct. Henry Ho, you got the right possible. If the trend is going higher and higher and higher and higher, and valuation continue to be reasonable, hold it as long as you can. Well, it depends. Again, that's quite true. So you must have a technique or a system to determine when to hold and when not to hold, right? So if you have come to our courses that we'll be doing one on the coming Monday. Now bear in mind, we're doing the foundation course this Monday, January 14 and 15. We still have a couple of seats left. For those of you who is in the Klang Valley, who is interested to learn more about market timing and a little bit more about the a little bit more about the fundamental study, come to our course on Monday. Okay, so if you're interested, let me know, and we will teach you a long-term and a short-term way of entering and closing, and that way you will know how long to hold your portfolio. Okay, so just need to invest a bit of time and a bit of money, and we can get you going, right? So this is the one. And going next slides. Okay, now on the Singapore side, the market has done pretty well. Those we have recommended in July and August. Only Singtel hasn't been great performer, about a 5% loss, although it did pay a decent 5% yield again. So we got to give it a bit more time to allow the dividend to pay off, to really rise in here. ComfortDelGro, this one is a taxi company that we talked about it in July in the premium section. Yeah, there's a 35% return. September was Capital Mall, a 35%, and the last 3 months we did talk about this here. M1 Mobile is also a utility, pays a 5% dividend. Now you notice all the PE here. Now going back to the Singapore side, all right, if you are premium members, you're able to see this. Not this one here. Okay, you can see Singapore PE is about 12 times. Okay, Singapore PE is about 12 times, which is the orange here. So if you go back to this, what we have, right, you will see they are just about in par. ComfortDelGro is 12.5 times. Only Capital Mall is slightly overpriced. M1, ARA, all this just slightly only about 12 times. but definitely Malaysia PE is higher valuations here. So that's what I think 2003 will be a good year for both the Singapore market and Malaysia market. Now don't forget the 2-year growth here is 6.4% per year, and Singtel has 11% growth. So that's a lot of growth in terms of the revenue going forward. Now these are all the historical data that we draw out. Okay. So on risk aversion and risk taking, this is my best performing stocks for 2012 has been DG for the KLSE and Capital Mall, for the Singapore side, and also the Aliran will be taken private. No. The Aliran one, if you have bought it a long time ago, then it's okay. But if it's taken private, there's not much gain. Okay, there's not much gain into it. Okay, you still need to do your due diligence again, because I'm not your financial advisor, right? These are basically a case study that we have, and you just want to look overall to the performance what we have, right? So investor who's looking for stable income and revenue growth domestically will probably hit winner with this DG in here. My two misses that I have is TDM for the KLSE and also the Singtel, a 5% drop. Now TDM just missed the mark, as I said before. Investors sold off when it broke to the 200 moving average, but it's looking for a rebound now. On the SGX front, for Singtel, they did miss some sort of a forecast missing, so investor dumped the stock. But again, coming to the January 2013 early days, we are still looking forward. So there were many questions posed. Some people have bought TDM, some people who have bought Singtel. They asked me, should they cut loss or not? Again, this is a personal preference. I can't really advise you unless we have some sort of a private arrangement, or you can open up the account with us and let us help you to manage it. Then the returns we did perform quite well for our clients portfolio, about a 12% return for the smaller account and a 10% return for the bigger accounts. Okay, so now remember, very important is that we always have winners and we always have losers. Okay, make sure you have more winners than losers, and that way, like what we've seen, then you will have a much better returns. So it is almost impossible to seek higher return without taking any risk. That's a moral. So you must take some risk over in there and allow some time to move, let the stock goes higher. I think that's all I have. Okay. My outlook for 2013 is very likely the general election 13 will be held on the 24th or 31st, as it coincides with school holidays. Okay, market should and will continue to move higher, at least to the pre-announcement of the general election. My technical goals I think will hit 1750 within the Q1 of 2013, or at least latest should the bull market continue. Okay, the bull market will continue. Now, if you read early on my 2013 January stock market comment, we talk about the market cycle. So we will believe on the fact that if you believe that market go through a cycle of boom and bust, then the bull run should end somewhere between towards the second half of the year, around September, October 2013. Then going forward from that, that's going to be very, very difficult. So we can only say too much to the general election. So we favor the high quality dividend stocks. Consumer will continue to be also a favorite, because we believe that the institutional will go. So use your magic scanner, those of you who is a premium member, and if you are not a premium member, subscribe to our magic scanner, subscribe to be a premium member, and use that to look for the low PE and high dividend paying stock, like what we did last Saturday. So that's all I have for the quick outlook in there. And now we have Bill here. We're going to get Bill to say a few words regarding what we have done so far. All right, Bill, here you go.
Yeah, thanks, Martin. That was a really good outlook. I'm just going to share a few things with you today. I went to a broker house yesterday, and I won't mention any names. And I wanted to get a copy of what their outlook was and so on. And then I noticed that they were recommending a share. And I asked them, and they said, this is a share, Bill, you should buy and put it in all your client portfolios. Would you like to know the name of that share? Anybody? Okay, right, all right. The name of the share was Old Town, some coffee business kind of thing. Now, let me give my analysis of Old Town, a little bit of psychology behind this. And I'm going to back up a little bit. Last weekend, I was reading a great book by Richard Wyckoff, written in 1913. It's a classic book. And it's called Adventures on Wall Street. And he asked, he said, well, why is it most investors and traders lose money? And he gave a couple of reasons. He said, one is because most investors will buy after a big bull market run up and the news is good. That's when they buy. And they don't, because why he mentioned, Wyckoff mentioned, because investors don't like uncertainty. They like a sure thing. They want to join the crowd and get rich with the crowd. But unfortunately, that is the cause of why most investors lose. And analysts play to the crowd. They recommend shares when they've gone up a lot. And a good example is Apple, one large investment bank here in Malaysia. Again, I won't mention any names. They were advising all their clients to buy Apple when it was at $720 a share. Why? Because the news was good, all these great products. Okay. Oh, okay. So in any case, a lot of people who bought into that story, now they're sitting on 20 and 30% losses. Now, this is the reason why. Number one, I recommend that you read books by masters who are multimillionaires, who are successful, like Peter Lynch, John Templeton, Fisher, people like that. Because those are the books that can give you insight by people who've made large monies in the market. But forget about reading all the crap in the newspaper and the different popular publications and the research material, because ask yourself, people writing those articles, are they multimillionaires or they just get paid a low salary? Okay, but let me get back to this. Now, why do I mention this? Because what the magic scanner does, and I'm writing an article for Malaysian Business on the magic scanner, will come out at the end of this month. Anybody who wants a PDF of that, we're happy to forward that to you. But however, magic scanner helps you identify quality shares which are not on the radar of the analyst in town, not on the radar of the crowd, ones that haven't been pushed up or marked up to highs. So if you focus on those shares, use your volume spread analysis, it can help you identify high odds situations. But again, you will not have the comfort of the crowd. There will be uncertainty. There will be fear. There will be pessimism. But that is how you make the money. You don't make it by buying after everybody else has bought it. Because guess what? Those people who bought earlier are the ones that are selling to the crowd. So consider that. And by the way, this coming Monday and Tuesday, we're having our foundation course. For those who are prior graduates, you don't have to pay. You can come. For those who are not, this will give the opportunity of changing your financial life, putting you on the right track to trading against the crowd and making money on a regular basis. So with that, I do wish you a great week ahead, and manage your risks and make some money.
Thanks a lot. All right, Bill. Okay. Okay, so now what we want to do is, since we only have 7 minutes, we'll skip the item 2 and item 3. We'll keep this for next week, about the best career with the highest pay, which is the hint, the financial sector. The reason why we are very bullish about the financial sector, we are saying that if you have any children who is going to be coming out to work, get into the financial sector, and we have a couple of reasons here. That's what I got my intern here, who is actually interning. Perhaps maybe I can get but his view why he wants to get into the financial industry. All right, Kwan, just say a few words.
Hi, morning, people. Wong here. Yep. My main reason to join the financial sector, or to join in the future, is that I have really great interest in it. I believe in enjoying to do something that I enjoy, and I'll be good at it. And other than that, I've been exposed to the financial sector at early ages because of my parents as well, and I've been learning a lot and a lot more from Martin, and I think I'll proceed more into the financial sector in times to come. Thank you.
That's and how are you, Kwan, this year? He's only 21 years old. Okay, so he has a good future ahead of him, right? I started this industry very late lah, almost mid-30s, man. Lao lang, as they say in Hokkien, lah. So that's why we want to get people. So any of your children wanted to, want to go under intern, come to us, okay? Come and see us. We'll train them up. We got a 1 month or 2 month internship program that we have under Jupiter Securities. Okay, so now I just want to go through the stocks. If you have your stocks, send it to me. We will analyze the stock. Now, what I'm going to do different.